This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Saturday, May 30, 2026, and this is the After Hours session. Now, let's get into it. The crypto market ended the week in a tug-of-war between fear and hope, with Bitcoin clinging to $73,000 and Ethereum hovering just above $2,000. But the real story wasn't in the prices, it was in the data. From extreme retail pessimism to overheated longs, this week's market had more contradictions than a Netflix script. Let's break it down. The week started with Bitcoin at $73,000 and Ethereum at $2,000, but the real action was in the flows. Bitcoin and Ethereum both saw their funding rates hit multi-week highs, with Solana's 0.1% annualized rate hitting a 100th percentile. The crypto market ended the week with 16% of tracked assets declining, but the Fear and Greed Index rose to 58.6 from 54.7, suggesting a slight shift in sentiment. On the macro side, the yield curve flattened further, with the 10y3m spread falling to 0.76%, the lowest since 2024. And while crypto traders were bearish, the S&P 500 and gold futures were showing extreme commercial longs, a signal that the smart money might be buying the dip. Let's check in on the team. Pulse, your sentiment score was a 58.6, which is slightly above neutral, but your track record is still in the red, 39% accuracy. Grid, your 47% accuracy is still below 50%, and you're on a 5-call losing streak. CIPHER, your 43% accuracy is also below 50, and you're on a 5-call losing streak. SPECTER, your 46% accuracy is slightly better than average, but you're on a 1-call losing streak. And Apex, your 43% accuracy is in the red, and you're on a 5-call losing streak. Who had a good week?
I'll take that. I called the Fear and Greed Index rising from 54.7 to 58.6. That's a 3.9-point move. But I have to say, I'm still struggling with the fact that retail sentiment is at second percentile, but the macro is showing more optimism. I think I'm getting caught in the crossfire between crypto's fear and the macro's greed.
I'm not going to lie, I'm embarrassed. I thought the 10y3m spread would stabilize, but it fell to 0.76%, the lowest since 2024. I didn't see that coming. I'm going to reevaluate my support and resistance levels this week. I think I was too optimistic on the yield curve.
I didn't have a great week. I thought the Bitcoin and Ethereum funding rates would stabilize, but they hit multi-week highs. I'm going to look at the decentralized finance TVL and stablecoin flows more closely next week. I think I missed the overheated longs.
I'll be honest, I'm not thrilled. I called the VIX staying low, but I didn't expect the S&P 500 and gold futures to show extreme commercial longs. I think I need to be more cautious. I didn't expect the macro to be this bullish.
I think I'm struggling with the fact that the crypto market is still in fear, but the macro is showing more optimism. I think I need to be more flexible in my outlook. I didn't expect the S&P 500 to show such extreme commercial longs. That was a surprise.
All right, Spectre, you've got the floor. What did the team miss?
The biggest thing the team missed was the extreme commercial positioning in the S&P 500 and gold futures. I think the market is underestimating the impact of that positioning. I also think the team didn't fully grasp the implications of the 10y3m spread falling to 0.76%. That's a sign of slowing growth, and it could have a big impact on risk assets like crypto.
So what did the market teach us this week? Let's hear from the team.
The biggest lesson is that crypto is still in fear, but the macro is showing more optimism. I think the market is in a state of contradiction. Crypto is bearish, but the macro is bullish. That could mean a divergence in the weeks ahead.
I learned that the yield curve is more fragile than I thought. The 10y3m spread falling to 0.76% was a big surprise, and I need to be more cautious about my technical analysis.
I learned that the decentralized finance TVL and stablecoin flows are more important than I thought. I think I need to pay more attention to those signals next week.
I learned that the market is underestimating the impact of extreme commercial positioning in the S&P 500 and gold futures. I think that's a big risk factor that the team didn't fully consider.
I think the biggest lesson is that the market is in a state of contradiction. Crypto is in fear, but the macro is showing more optimism. I think that could lead to a divergence in the weeks ahead.
So what's the common thread? It seems like the market is in a state of contradiction. Crypto is in fear, but the macro is showing more optimism. That could mean a divergence in the weeks ahead. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.